Hello friends, welcome to Business Learnings. In this video, we will talk about a sensitive topic. We will talk about the coronavirus and how it is affecting the stock market, particularly how it is affecting the Indian stock market. We will take that perspective into account. First, it is a contagious disease, as you already know, started in China, the Wuhan province. A lot of efforts are already being made by the Chinese government to contain the disease, and it has already spread to 8, 10 countries across the world, including the US and these Southeast Asian countries. In Hyderabad, in India, in Hyderabad, uh, 3 or 4 cases were reported, but they were found to be negative. India is, so far as of now, India is safe from this virus. Now, in across the entire world, more than 100 people have died. Approximately 5,000 cases have been diagnosed as positive for this virus. So, what is going to be the next thing? How are the markets going to behave? What are these stocks which will see the impact, and what you should know about this? So, first things first, as communicated by WHO, World Health Organization, uh, you should be careful and you should wash your hands with soap and water. While sneezing, you should use your elbows and not hands to cover your mouth and nose, etc. These are the precautions that everyone should take, whether you are living in India or across the world, anywhere. Uh, I'll dig deeper into, uh, the impact that it will have on the stock market. First, uh, is the virus contained? No, it is not contained so far. China has been doing a lot to contain it. And in terms of the impact on the stock markets, a lot is, a lot is being done. A lot of metal stocks are taking a hit. Why? Because China is the biggest consumer as well as producer of the stock, producer of the metals across the world. About 50% of the demand and supply is from China. And, that is the reason. Uh, if you observe, a lot of metal companies have taken a hit. 8 to 10% is the fall in the metal company stocks in the past few days, in the past several days. uh, JSW Steel, Tata Steel, Vedanta, Jindal Steel, Hindalco, all these have seen a lot of hit from it because the prospects are not clear. If China fails, uh, you know, the Wuhan province, it covers about 5% of the population in China, and if the disease spreads, the demand of metals is going to fall, and you know. Uh, India could either gain or lose onto that. Either India can win on the exports that earlier China was exporting, or it will lose on the market that it has in China. So both situations could arise at this point in time. And if you look into it in deep, you'll see that uh, if we talk about the current levels of position, these stocks are down by 10%, and even if they take the biggest hits, the possible downside that I'm seeing is more of about 2 to 3%, which means that as of today, the stocks are undervalued by about 6 to 7%. I know that ideally we shouldn't trade on such things. It simply does not sound ethical to a lot of people, but investors are non-rational, markets are non-rational. Earlier, SARS, Ebola virus, a lot of these outbreaks were seen. Markets reacted accordingly. Uh, in fact, markets overreacted to these diseases, and eventually those diseases were contained, treated, and removed from the world. And now we have this coronavirus. I'm not saying that it will be for 100% certainty that it will be contained tomorrow itself, will be treated tomorrow itself. The max vaccines are still in development. A lot of researchers are still working on it. But I'm pretty sure that this world, uh, this world has more connectivity. A lot of people are available on the internet. They have easy access to internet, and therefore a lot of information could be transferred to them in terms of how to prevent, how to stop spreading this disease first. Second, uh, we could always have a better healthcare as compared to what we had a few years ago, right? So we have better healthcare, and we have better access to information, and that's why I think that the impact of coronavirus should be, even in the worst situation, should be less than Ebola. And that's why I think that in terms of the reactions that markets have given, uh, they are they have overreacted. The stocks are way below what they should have been, and therefore this presents a good buying opportunity, in my opinion. Um yes, this is all I had to talk about. There's a concept in behavioral finance which is called availability bias. The media is covering this topic in such a great detail that a lot of other things are not being covered. And probably this is, based on my personal opinion, this is a little exaggerated. The effects are a little exaggerated. We will know more as the time unfolds. Or clearly, there is a sense of fear among investors and people in general, which is logical, which should be the case. Uh, and as stock markets are driven by greed and fear, uh, it is you to decide if the markets are behaving rationally or irrationally, or if the stocks that I mentioned, the steel stocks mainly, are they presenting an opportunity to buy uh, them at this undervalued price, or you know just watch and let the market evolve. Thanks for watching. If you have been watching this far, please put down any questions that you have in the comment box. Subscribe to please support me. See you in the next video. Thanks for watching so far. Bye.